This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. President Xi used his final meeting with Biden to send a message to Trump. China wants to be friends with the US, but there are red lines. The US is said to be nearing a decision to let Ukraine use Western-made weapons to strike some targets in Russia. Plus, our exclusive interview with the CEO of the Hong Kong Stock Exchange as the Stock Connect program turns 10.
Heidi, take a look at how U.S. futures are coming online after stocks had the worst week in more than 2 months. Tech led the declines. They've actually lost more than half of the gains that they saw after the presidential election. We are watching for big moves. We do have NVIDIA earnings coming up as well. We had Treasuries also wiping out those gains almost entirely for the year. The 10-year yield almost getting close to that 4.5 level after strong retail sales numbers. But we'll continue to watch those Treasury yields as we're now seeing the dollar continuing to gain ground for 7 consecutive weeks. On the other side of the trade, we've had massive declines for Asian currencies. Take a look at how the Japanese yen is trading at the moment. And Nikkei futures looking like this. Of course, we had a little bit of gains in the previous session, but right now we're seeing a little bit of downside. And the Japanese yen continues to weaken. It weakened more than 1% last week against the U.S. dollar. We're at around that 154 level. And we're watching very closely today BOJ Governor Ueda actually speaking today, and this will be his last chance to communicate his thinking before the rate decision next month. We also had the Aussie dollar actually declining by the most since July or so when it came to the weekly basis. And we're expecting even more declines for the offshore yuan possible, according to Goldman Sachs, if we see trade wars being ignited with Donald Trump in the White House. They're calling a 750 as early as in 6 months, Heidi.
And that's why we're watching this bilateral relationship so closely, right? Even as Chinese leader Xi Jinping telling President Biden in this last meeting that he's ready to work with Donald Trump to improve the relationship between the world's 2 biggest economies. But Xi also used that meeting to lay out a warning when it comes to China's red lines. Let's bring out Bloomberg News Managing Editor John Edwards for more. So what are the boundaries? What are the red lines that Xi alluded to?
Yeah, he went over 4. He said that the red lines are any encouragement of opposing the Communist Party's remaining in power. Related red line would be any encouragement of spread of democracy in China. A further red line would be any encouragement of independence in Taiwan, and then anything that would undermine the Chinese economy. So those are the 4 areas that Xi outlined that he said were crucially important to China and would be the basis of any rapprochement between the U.S. and China going forward.
We sort of heard of some red lines when it came to artificial intelligence and how they use it around nuclear weapons for both countries.
Yes, that's right. So President Biden and President Xi agreed that there would be no use of artificial intelligence in nuclear weapons, that is, in targeting or deciding on when they should be used. So that is certainly a step that I'm sure puts the world at ease to some extent.
To some extent also, there is this idea that perhaps Beijing is better prepared this time around, given that this is the second Trump presidency. Are there concerns, though, in terms of the pretty strong mandate that this president-elect has, is that we could see sort of more drastic action than even in his first term?
Yes, I think there are definitely concerns about that, and I believe China is ready for it. They indicated actually in an interview with Bloomberg TV on Friday with a central bank official that if there are the tariffs that Trump has said that he would like to put in place, 60% on all Chinese goods, then China would surely retaliate. And so that, again, is a spiral that no one wants to see. I think there is some question as to how much of a negotiating tactic the tariff threat is. But China is signaling that, whether it's a tactic or not, they are prepared to respond aggressively if those tariffs are put in place.
And John, of course, we are headed towards the G20 meeting in Brazil as well. What can we expect?
Yeah, I mean, I think one thing there will be tension with Argentina. Argentina's President Milei has sort of reached out to China and indicated some interest in firming up that relationship, but he's making a lot of noise about really going his own way and leading some people to start to kind of jokingly refer to it as the G19, with Argentina seeming like it's possibly on its way out. So that will be an interesting relationship to watch for sure.
Managing editor John Edwards there when it comes to China and the US and some of the other stories that we're following out of China. And President Xi Jinping has told President Biden that China would prevent a conflict on the Korean Peninsula. Xi says Beijing would not sit by when its strategic security and other interests are under threat. Biden had expressed concern over North Korea's troop move amid reports that Pyongyang could send tens of thousands of troops to help Russia's war against Ukraine. A stabbing attack has left 8 people dead in the Chinese province of Jiangsu on Saturday, the country's second mass killing in a week. The incident happened at the Wuxi Vocational Institute of Arts and Technology. A 21-year-old man has confessed to the crime, officials saying that he was discontent with the school over a graduation matter and internship pay. The US is said to be nearing a decision to let Ukraine hit some military targets in Russia using Western-made weapons. Bloomberg's Marc is with us now. There are sort of some boundaries around this guidance.
Yeah, the idea would be that Ukraine earlier undertook an incursion into Russia in the Kursk region and has been sort of deployed there. And part of the idea of these North Korean troops coming over is to bolster Russian forces to try and oust Ukraine from there. Now, my understanding, or the general understanding is that President Biden was quite shocked about this idea of North Korean troops turning up in a European conflict. So he's authorised that they could use the weapons in that Kursk sort of region as a starting point, which would give Ukraine the option of trying to fire on format, where North Korean troops are gathering or Russian troops are gathering to try and disrupt that progress. And there's sort of a broader point here that everyone's sort of looking towards President Trump taking over, President-elect Donald Trump taking over and wanting a peace agreement. Now, Ukraine's only negotiating, the only ace it has up its sleeve is this bit of Russian territory. So if it has to concede some territory, at least it's got something it can bargain with. If Russia pushes it out of there, basically they've got nothing and they're at the whim of whatever the White House and the Kremlin decide there.
Yeah, so in that sense, how much progress could they make just in the next couple of months, right? It feels like there's sort of a countdown clock at this point because we know the strategy from, Trump 2.0 presidency advisors like Elon Musk, what they've been saying is quite different. Yeah, well, I mean, look, the worry now is that Ukraine, from a distance, it seems that it's beginning to really struggle. I mean, Russia has been, and they did it again yesterday, they've been targeting its energy infrastructure to basically ensure that most of the country, they don't have electricity or heating during what's always a really, really cold winter. It's a real attack on sort of the whole civilian nation in a sense there. And of course, Russia's emboldened by Trump being there, and that's part of the North Koreans coming in. So we've heard from Vice President-elect J.D. Vance that what he expects is that Ukraine will probably have to give up what Russia has occupied. Ukraine won't be getting into NATO, and which is pretty much Ukraine's going to be left at the mercy of Russia, because what everyone expects is that Russia could do a deal like that, and then it would turn up again 2 years later once it's rearmed, etc. The one thing that I think is kind of interesting is that if once Trump has to actually start negotiating with Putin, who he clearly admires enormously, he's going to find that Putin is not particularly interested in negotiating, and that he feels he's on a roll here, and that Ukraine is starting to buckle, and that Russia has reinforcements. So whether Trump can actually get a deal from the Russian side is going to be quite an interesting question.
And let's not forget that President Trump really had his moments with the North Korean leader Kim Jong-un during his presidency. What are the implications of this deepening relationship between Putin and Kim Jong-un and an incoming Trump 2.0 government?
Absolutely fascinating, Shery. Yeah, I mean, look, basically the three rogue regimes of the world now are North Korea, Russia and Iran. And then, of course, you've got China that's potentially that has sort of a foot in each camp and supports those nations while obviously doing a lot of business with the West as well. And now Trump basically has had this, unusual relationship, but to some sort of friendly-ish with the head of North Korea. He clearly really admires Vladimir Putin for whatever reason, but he's quite tough when it comes to Iran. And we've seen with his tariffs, he sort of wants to be fairly tough with China, at least economically, on that front. So the dichotomy there is really interesting. How he operates with them. Those four countries are sort of supporting each other, but it's the thing with them is they're not natural allies. It's just sort of intersecting interests there. So if one of them could get a deal with Trump, I'm sure they'd be happy to break with it. And I think that's what Trump might be looking for, to sort of pull them away from each other gradually there.
Bloomberg's Michael Heath there. And other political stories that we're following at the moment, Hezbollah has confirmed that its media chief Mohammed Afif was killed in an Israeli airstrike on central Beirut. This marks the latest in a string of targeted killings of top Hezbollah leaders, which included Secretary General Hassan Nasrallah in September. Lebanon's Ministry of Health also said a second separate strike hit Mar Elias Street, killing 2 people and injuring 13 others. India says it's made its first successful test of a long-range hypersonic missile, a high-tech weapon only in the arsenal of a handful of countries. India's defense minister called the test a major milestone. The missile can carry payloads over 1,500 kilometers. Hypersonic missiles are fast, low-flying weapons designed to be more quick and agile to evade traditional defense systems. Coming up on the Asia Trade, why Temple University thinks China's economic slump may help strengthen bilateral ties between Beijing and Tokyo. We'll also hear exclusively from the CEO of the Hong Kong Stock Exchange as the Stock Connect program celebrates its 10th anniversary. Plus, JPMorgan will be giving us their take on how Donald Trump's re-election might impact Asian tech. This is Bloomberg.
On the world, we reimagined, we re-energized, we revitalized, we strengthened, and we wove together our alliances and partnerships in new ways to try to advance an increasingly shared vision for a future that's more free, more open, more secure, more prosperous, more resilient, more connected. Here in the Asia Pacific, we bolstered trilateral cooperation with Japan and Korea. We deepened ties with the Quad, India, Japan, and Australia.
US Secretary of State Antony Blinken there on building alliances in the Asia-Pacific. And of course, a key focus for world leaders gathered at the APEC summit in Peru was on working with the next US administration, as President-elect Donald Trump has already warned of implementing tariffs against China. Our next guest says the expected disinflation path is under threat because Trump's tariffs will make US imports more expensive. Joining us now is Katrina, who's the Director of Economic Research at Moody's Analytics. Really great to have you with us. And as you know, so many aspects to his fiscal plan, from the tax cuts to tariffs to the curbs on immigration and the deportations as well. Is it possible at this point to model what the impact will be when it comes to the inflation fight?
So we can come up with different scenarios at this point, but we can't say with any great conviction what's going to happen next year. I mean, I think when it comes to US inflation, for instance, we can say, look, things will likely continue on this bumpy downtrend in the remainder of this year, but next year it's highly uncertain because at the end of the day, we don't know when these tariffs are going to be implemented and we don't know how aggressive they're going to be. We also don't know what kind of retaliation we're potentially looking at from China and others. So I think that's really going to dictate the state of play. And then that's, of course, going to dictate how the Fed and other central banks respond.
Yeah, I'm glad you bring up the Fed because we were just looking at the market bets this morning. December looking like basically a coin toss at this point when you take a look at Fed's funds futures pricing. it's really difficult for policymakers in terms of what they do now, right? Are we basically at a pause point for some of these central banks, namely the Fed, because there's so much opacity over what next year is?
Definitely. It's really in wait and see mode, right? And the Fed is one thing, but we're also looking over here in emerging markets in Asia, right? It looked like for many, the RBI, for instance, they were on track to begin their easing cycle in December, but that looks like it's off the cards because now we're looking at, with this US dollar strength, some significant emerging market currency weakness. And so because that currency weakness is such a key input into monetary policy, that really derails this expectation that we would see kind of ongoing easing through next year.
Yeah, Goldman Sachs has been calling the yuan at 7.15 as early as 6 months if we do actually see this tariff trade war really unfold. What are the implications for the Chinese economy at a time when it's trying to really overcome its slump and it's really putting all efforts on stimulating the economy?
Yeah, it's an interesting kind of conundrum that we've got with China, right? So, right through this year, the Chinese government was really focusing on that tried and true manufacturing export engine to get them through this persistent weakness coming out of the pandemic, that they just haven't got their groove back. And so they were kind of neglecting domestic demand. But now we're seeing this kind of shift over to them having to pay more attention to stimulating the property market, for instance, to try and get that domestic demand and that consumer, psyche back, because that has been persistently struggling. And I think if we do see aggressive tariffs from a Trump 2.0, then China's going to have to continually look even more inward to try and help bolster domestic demand, to try and help kind of overcome that export weakness. And that's something that Chinese policymakers don't really have a nice track record in being able to really build that side of the economy. They're good with the export investment side, but not so much with the consumer and empowering the consumer to get them out there spending.
When it comes to consumption, we have seen a little bit more strength when it comes to the Japanese economy. Given the weakness in the Japanese yen, how much more challenging will it be for communications for Governor Ueda when he gives his speech later today?
Oh my goodness, I think it'll be incredibly challenging. I mean, what we've seen from the Bank of Japan is that almost a floundering type situation, because on the one hand, you can see that, the households have improved a little bit, but they're still kind of, not doing too crash hot, right? And then on the other hand, you've got this incredible yen weakness. It's down about almost 10% year to date. And so that's really backing the Bank of Japan into a corner to try and continue to gradually hike rates to try and support that yen. And what's made it even more difficult is the fact that we've got this US dollar strength, and so that's really adding to the pressure on the yen, and it's really building the need for the Bank of Japan to turn more and more hawkish to try and support that yen.
We've been talking a little bit about, whether Beijing this time around could be better placed or more vulnerable, given the domestic economic pressures are still, pretty unabated, right? Where do you sit on that? Because I suppose one of the arguments is that, if this is a prolonged trade war, they might need to kind of save their ammunition over the 4 years.
Yeah, I mean, my sense would be that at this point it does look like China's much more vulnerable this time around, because even leading into this sort of Trump 2.0, we were already seeing increasing reluctance, not just from the US, but also from other important trading partners of China to actually receive those Chinese goods, because it was threatening their own domestic industries, thinking here particularly of Europe. So that export side was already coming under pressure, and now it looks like it's coming under even more pressure. The hope is at least that maybe Trump is using these tariff threat as a negotiation technique to try and, build up their own US domestic industries. Whether that leads to sustained increase in direct foreign investment, then that's ultimately a positive. But at this stage, it's just too hard to tell. But given that China is kind of limping into this Trump 2.0, I would say that it's much more vulnerable this time around on net.
Katrina, always great to have you with us. Katrina L, Director of Economic Research at Moody's Analytics. More ahead on the Asia trade. This is Bloomberg.
Boston Fed President Susan Collins says a rate cut could still happen next month, but emphasized that the final decision will be guided by incoming data. She told Bloomberg exclusively that she's not seeing evidence of new price pressures.
There's no preset path. I do see rates as still in the restrictive range, which means that over time some amount of easing will be appropriate. But the economy's in a very good place right now. And inflation's coming back down to target. The labor markets are healthy. We're seeing solid growth. The goal of policy is really to sustain that healthy set of conditions, recognizing, there are risks on both sides. And so I think we're well positioned. I certainly wouldn't take another ease in December off the table. But again, we're not on a preset path. And so we'll have to look carefully at the data and see what makes sense when we get to December 18.
Well, the data this week showed inflation a little bit stronger than it had been in the CPI and the PPI, and those who do the nerdy calculations for the PCE say we're going to see the same thing. Should you keep your foot on the brake a little more then, because inflation is not back down to your target?
So, I don't focus too much on any one data point. I think it's really important to look holistically. And when I do that, what I see is that, first of all, inflation has come down significantly. I focus on the, a couple of month averages. And if you take food, energy, and in particular shelter out, the rest of inflation has actually been in the range consistent with the 2%, exactly what we'd like to see. What's really still elevated is shelter, and that is taking time to come back down, and a lot of that really reflects shocks from the past. I'm not seeing evidence of new price pressures, and so I think it's important to stay the course, but that analysis of the data is part of why I thought it was really appropriate for us to begin easing in September and to be in an environment where we are really looking over time methodically, perhaps patiently, to be normalizing policy, to maintain those healthy conditions that I talked about a moment ago.
Boston Fed President Susan Collins is speaking exclusively with Bloomberg's Michael McKee. Let's take a look at how we're trading when it comes to moves in Australia and New Zealand bonds. Of course, tracking what we see as Treasury seeing their yearly gains just dwindle. We were talking a little bit earlier that Fed December cut is now kind of looking at risk, pretty much a coin toss. But at the moment, we are seeing Australian bonds rallying. We're also seeing some potential gains when it comes to Japanese bonds as well. Kiwi as well as Aussie bonds gaining after dip buying, helping the Treasury market to raise most of those losses on Friday. We are seeing that drop in the yield in the 3-year as well as on the 10-year as well. Chris Kent, the RBA Assistant Governor, is speaking a little bit later on today. This is Bloomberg. Take a look at what we're watching when it comes to FX as the market continues to really process the potential implications of a Trump 2.0 presidency and in particular tariff and currency risks across the region. Dollar yen is holding at that 154.72 level. We're about 200 pips lower than last Friday when, of course, we learned that the BOJ Governor Ueda will be speaking twice on Monday. That risk of that decline being reversed if we see kind of less than convincing remarks to investors in terms of what to expect for that December rate hike, whether it's on the table, whether there's a little bit more uncertainty about that. But yen shorts are starting to build again. We are seeing the biggest positions when it comes to CFTC data since July. That was the, and of course, the great unwinding of yen carry trades as well, very much still top of mind. Taking a look at dollar offshore yuan at the moment, we are seeing a little bit of sort of stability at this point, right? But of course, we are still watching for how the yuan potentially presents itself in another leg of this trade war. Goldman Sachs saying that Trump's trade wars will lead to more losses in the Chinese currency. They're seeing a likelihood of the yuan slumping even further if tariffs are slapped on Chinese exports. And they're saying that basically China and its currency likely to be the primary target of that Trump trade war, according to Goldman strategists. Guggenheim Securities co-chair Jill Millstein says that it's unlikely that President-elect Trump will significantly deregulate the financial sector and risk another crisis. He told Bloomberg in an exclusive interview that the reality of a second Trump term has set in for markets.
You saw the rally after the election in the equity markets. That's getting a little more muted now as reality sets in. But yeah, I think there's a general expectation that the M&A environment will open up. The financing markets have been incredibly strong. So, I think there's no lack of credit availability, notwithstanding what Jamie says about the banks. The private credit markets have boomed in the last 10 years. So credit availability remains very strong. You can see that in the tight spreads in the high yield market and in the investment grade market. But yes, on the M&A side, I think there's a sense among most investment bankers that there should be a freer regulatory environment to try and get deals done.
Probably one of the clearest trades you have seen is in the financial system, in the banks. You've seen investors pour a lot of money into banks, thinking that not only that Basel III might not be as strong as it would have otherwise been, but you think about even Sherrod Brown, not in the Senate Banking Committee anymore, for example, or the SEC facing some change under a Trump administration. How significant, Jim, might the rollbacks in regulation be for the financial industry? Yeah, so it depends it depends who's in the seats. We still don't know who's going to be at OCC, the FDIC, the FHFA, Treasury, the CFPB, the Treasury Department. These are all still open seats. So, and the people matter, right? That's first and foremost. The second thing is the particularly with regard to the banks, the regulatory system is quite complex with overlapping jurisdiction of different federal agencies. So to actually have a relaxation of the regulatory constraints under which they currently operate, there has to be coordination among various federal agencies. And so it takes time. It'll take time. Do you think that there is a paradigm shift going on? You think about just a whole generation of bankers that were not working in the 2008 run-up. They don't remember what it looked like, the froth under the surface. Do you think that deregulation could create that froth again? Well, it may be true in the financial institutions that there are few of us left who were there and went through that trauma. But it's not true in the regulatory community. Now, there could be a wholesale slaughter of regulators at all levels under the Trump administration. I doubt it. And as a result, the regulatory institutions, the Fed, the Treasury Department, the OCC, have deep institutional memory.
Guggenheim Securities co-chairman Jim Millstein there, and Haidi, of course, we continue to watch the potential implications from the incoming administration of Donald Trump in the United States and what that could mean, especially for China, especially for, say, automakers, EVs. We do have a big week of earnings in China, including Xiaomi, Xpeng will be reporting, and what we'll be really watching out for is what Trump's return to the White House could mean for not only Chinese electric vehicle firms, but also tech. Of course, the president-elect has threatened 60% tariffs on Chinese goods. And we know that already when it comes to EV makers, the European Union last month also imposed tariffs. We've heard from people familiar with the negotiations, the talks on alternatives to tariffs with the EU are not necessarily seeing a lot of progress. So really what a Trump presidency, a Trump 2.0 could mean for all of these firms reporting this week will be a key question.
Yeah, it's a double whammy, actually a triple whammy, right, in terms of the pressure from the US, the pressure from EU, as you mentioned, as well as just the weakness across the domestic market front as well. So we're watching very closely, as Shery, you mentioned, the likes of Xiaomi, Xpeng and NIO, but also more broadly across the kind of China tech space, right? It is a pretty critical earnings season because we have seen that sort of materialization of earnings risk amid really intensifying competition at home, weak economic sentiment in China. we heard from Tencent's President Martin Lau saying that he sees tentative signs of a Chinese economic bounce back, but still that caution that a recovery will take time. So some of the things that we're watching out this week and today, Xiaomi's third quarter revenue likely rose 28%. EV vehicles, the deliveries continues to accelerate. Of course, that geopolitical element continues to be, something that is foreshadowing of potential pressures to come. We've got Xpeng on Tuesday coming through. The operating loss there likely widened. Margins will continue to remain weak, even as we've seen guidance exceeding deliveries there. And also watching the likes of Weibo as well, Neo, and some of the sort of social media apps like Kuaishou and Baidu towards the end of the week as well, Shery.
And of course, Heidi, we have already seen some corporate results. Alibaba, for example, reporting anemic growth for its last quarter in its core Chinese e-commerce business, dragging down financial results that benefited from progress in its international and cloud divisions. The company said the domestic e-commerce operation only eked out a 1% gain in the September quarter. On the other hand, its international division saw a 35% growth in revenue, while its cloud unit also grew over 7%. Alibaba affiliate Ant Group has reported a nearly 200% profit gain in the June quarter. It marks a reversal of a year-long decline as the fintech company regained its footing from a government crackdown. Ant says it contributed $343 million of profit to Alibaba, which translates to about $1 billion in profit based on Alibaba's one-third stake in the company. T-Mobile's network was among those recently breached by Chinese hackers in an attack on multiple telecommunications companies. The perpetrators had attempted to steal customer call records and compromise communications of political figures. T-Mobile says the hack did not have any significant impact to its systems and data.
And Shery, one of the stocks that we're watching in the Australian session is Resolute Mining. Of course, it has been a difficult period of time for this particular company. They're saying now that they'll pay the Mali government about $160 million as it seeks to resolve this ongoing tax dispute that's resulted in its chief executive officer detained. Resolute has paid an initial settlement of $80 million. The balance will be paid in existing liquidity sources in the coming months, according to a statement out just this morning. We saw the shares listed in Sydney suspended last Thursday. It fell 40% since the news of the detention of the Resolute Mining CEO Hariharan, along with two of his colleagues, that emerged around November 10th. And so really kind of highlighting some of the risk at this moment as we see the Malian government's position is that Resolute, which operates the Syama gold mine, should be paying the state $162 million to settle this tax dispute, which goes back to some back taxes following a sector-wide audit. So we're seeing some progress being made as the sort of negotiations towards the release of those individuals is continuing. We're also watching Australian uranium shares. They're sort of some of the outperformers so far this morning. Paladin Energy, some of the other Aussie uranium mining stocks advancing after Russia said that it would temporarily limit enriched supplies of uranium to the US. It potentially, of course, creates these widening supply risks to utilities operating American reactors. They generate almost a fifth of the nation's electricity. So we've seen some pretty big gains there. Deep Yellow up by over 8%. You're seeing Boss Energy up by close to 8% there as well. More ahead on the Asia trade. This is Bloomberg.
And we start you off with geopolitical news out of Japan. Japanese troops will regularly deploy to train alongside U.S. forces in Australia's north starting from 2025. Australian Defence Minister Richard Marr says the move marks an important statement about the commitment of the three nations in strengthening security ties. Marr met with his Japanese and American counterparts in northern Australia on Sunday. Japanese Prime Minister Shigeru Ishiba says he has no plans to meet with U.S. President-elect Donald Trump after attending the G20 summit in Brazil. The Trump campaign team has told the Japanese government that the president-elect will not meet with any foreign leaders before taking office in January. The two nations are still hoping to hold talks as soon as possible after Trump takes over. Chinese President Xi Jinping and Japanese Prime Minister Shigeru Ishiba have agreed to strengthen communication at all levels during their meeting on the sidelines of the APEC meeting in Peru. During the talks, Xi emphasized the importance of safeguarding the global free trade system and supply chain. Meanwhile, Ishiba expressed concerns over China's military activities in the East China Sea. Our next guest says China's economic slump could actually facilitate the strengthening of its bilateral ties with Japan. Joining us now, Jeff Kingston, Professor of History and Asian Studies at Temple University, Japan. Great to have you with us. Of course, we continue to see the need of all of these partners to work together given the uncertainty coming from Trump 2.0 and what his foreign policies will mean. But at the same time, given some of the issues that Japan and China have between the two, how feasible is this?
Well, a lot depends on how Team Trump proceeds with the tariff war. It seems increasingly unlikely that they're going to announce 60% tariffs on Chinese goods from day one. It's more of a negotiating position. We'll just have to see how it rolls out. But clearly, there is common ground in Tokyo and Beijing of how to manage the likely disruption to regional and global trade that might result. And, you know, as your earlier guest pointed out, the possibility of another Asian financial crisis, that risk has risen rather dramatically since Trump's election.
What preparations should Asian countries be making, and in sort of alliances, what sort of economic partnerships should these countries, including Japan, be looking at then?
Well, I think that it would make sense for Japan to try to strengthen relations with Indonesia. They have a new president, Prabowo, who indicates that he wants to take a much more active posture on the international stage. He's already visited Beijing. He mentioned that the overlapping claims between China and Indonesia are not necessarily a source of tension. And clearly over the past decade or so, Beijing has shifted more towards China and has indicated it wants to join the BRICS group. And so I think that this might be an opportunity for Ishiba to nurture better relations and indicate Japanese support for Indonesia's application to join the OECD and to try to facilitate Japanese companies tapping into a middle-class market in Indonesia of about 65 million people.
We've seen, quite interestingly, over the past few days, Lloyd Austin, probably his last visit in this capacity to Australia, really kind of strengthening this alliance-style organisation between Australia, the US and Japan, right? Japan's agreed to participate in these regular drills with those two other powers. Is this intended to send a message to Beijing?
Yes, I mean, I think that the concept of a free and open Indo-Pacific is aimed at containing China. The Quad group of India, Australia, United States, and Japan also seeks to counter China. But recall that, you know, Trump is going to have his hands full with the Middle East and the Ukraine. And so the Asia Pacific may not get quite as much attention. And under Trump 1, we saw that he was basically cutting China a lot of slack on the South China Sea and outsourcing regional security. So I think everybody here is looking at how does the war in Ukraine end? If it ends in a way favorable to Putin with the support of Trump, that's going to increase anxieties here, not just in Taiwan, about the reliability of the United States as a security partner. And clearly, that will send shivers up the collective spine in Japan.
I read in sort of some of your reflections that Ishiba will be asking Biden for advice on how to manage the president-elect Trump. Do you worry about, from the Japan side, perhaps less experience when it comes to dealing with this level of diplomacy, particularly with, you know, perhaps a higher level of inconsistency or uncertainty with President Trump?
Well, the foreign ministry here has a translator who attended every meeting between Abe and Trump. And Trump has expressed his admiration for Mr. Tauka. And so I imagine that he's quite busy briefing Ishiba on what to do and not to do. And so I think actually in Japan, there is experience of how to manage Trump. But of course, he is unmanageable. And even though Abe was the world leader closest to Trump, it didn't prevent Trump slapping tariffs on Japan. So the thing that you can rely on Trump is that he's erratic. And so it's very difficult to predict how that's going to work out. And I think that what Ishiba needs to do is to go and sort of be deferential to Trump and flatter him and see how things work out. He doesn't really get a chance to choose which president he deals with.
Sort of the playbook that Shinzo Abe used back in 2016. Jeff, what about when it comes to Taiwan? That's a clear red line for Beijing. What is Ishiba's stance there, and could this be a hurdle?
Well, yeah, I mean, Beijing, I'm sure, is quite unhappy that Ishiba has voiced strong support in public for Taiwan. Ishiba has also broached the idea of an Asian NATO. So on these particular security issues, clearly Ishiba is taking a stance that won't win him a warm welcome in Beijing. But it is encouraging, I think, for regional allies, even though Southeast Asian nations are always sort of straddling the fence. They don't want to be asked to choose sides. So the idea of an Asian NATO has not gone down well. I think they want to play a balancing role, and they want to seek and engage both sides, and they don't want to be forced to choose one or the other. But a recent survey did show half of Indonesians were inclined to favor closer ties to China over the United States. That's a rather dramatic shift.
Jeff Kingston, good to have you with us. Professor of History and Asian Studies at Temple University, Japan. This, of course, as we look ahead also to core machine orders here in Japan in just a few seconds from now, we're seeing the Japanese yen holding at that 154 level, continuing to be pressured against the U.S. dollar. This, of course, as we hear from authorities here in Japan, continuing to warn about the weakness that we continue to see in the Japanese currency. Of course, we do have a weakening yen, rising inflation risks as well, and all of this will play into the thinking of the Bank of Japan. September core machine orders right now coming out, a contraction of 0.7% month on month. This is a smaller contraction than economists had expected, and it's actually a contraction instead of a rise as economists had expected. So the expectation was for actually a contraction and a rebound for this month of September, but we're actually seeing it continuing to contract for a third consecutive month. The year-on-year number is also a big contraction of 4.8%. And as I was saying, of course, it's really about the Japanese yen, also about eco data, because we have been getting a little bit of stronger eco numbers out of Japan and what that could potentially mean for the Bank of Japan and Governor Kazuo Ueda. He's giving out a speech later this morning, and we will be watching for any hints over the timing of the next interest rate hike. Our economy and government editor Paul Jackson joins us for more on this. And Paul, I mean, what should we expect? Because as I was breaking the core machine orders, they were a bit weaker than what we had thought, but at the same time, we've been getting better consumption numbers, GDP numbers.
Yeah, I think the Bank of Japan is on track to raise interest rates in the coming months. So it's really a question of do they go in December or January. Now, if you remember in July when they raised rates there, I think the central bank was under the impression that everyone knew it was coming then. As we saw, the markets were certainly not entirely expecting that. We had that meltdown in August, early August, largely on US data, but the Bank of Japan also contributed. So there is an argument for improving the communication, improving the hints ahead of the next rate hike. So if he is going to go in December, this is his last kind of set piece opportunity to give a very clear hint. However, I think with a month still to go, we're still a little too far out for him to commit with something as strong as what did Powell say? You know, the time is approaching for a move. So I think he's going to just keep his options open today and reiterate the language that rates will go up if the outlook is realized.
And you mentioned the July meeting, and that time was when the yen was, what, at 162 almost, right? And we're slightly creeping up to 154 right now. How big of an implication does this have for Governor Ueda's thinking?
Well, as you know, central banks are usually loath to link currency moves with their decisions. However, some observers say that the decision in July was 80% or 90% related to weakness in the yen. The yen isn't quite as weak as it was then, but I think if we're heading towards 160 in December, then I think that's going to definitely increase the chances of a December hike.
Paul Jackson, our economy and government editor, with a preview of that speech that we'll get from Governor Ueda. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, 6:40 p.m. Sunday in New York. And also, of course, you have the TV Go function. This is Bloomberg.
We are seeing a number of Goldman calls being updated when it comes to Asian markets, in particular raising their view on Singapore stocks to market weight, downgrading Korean stocks to market weight as well. And it comes as we have seen Korea's Financial Services Commission saying the recent sell-off is, quote, excessive and they would take steps if needed. Interestingly, we're seeing an upgrade of Philippine stocks to overweight, despite, of course, the index entering correction territory on broader economic concerns. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And Haidi, of course, we're watching the G20 leaders really continue their conversations. We are going to Brazil this week, but also as we follow more earnings results out, we have NVIDIA as well this week.
In a way, it feels like the calm before the storm, right? This sort of twilight zone of a couple of months before we have the president-elect Trump take the White House for a second term. And still a lot of speculation as to what the economic consequences for not just the US, but here in Asia will be.
Really, we have seen traders pare back bets of more Fed easing, given, of course, potentially more inflationary pressures in the United States. That has led to the U.S. dollar strengthening for the past 7 weeks. On the other side of that trade, really pressure for these Asian currencies, including the Japanese yen, right now at that 154 level against the U.S. dollar. What this will really mean for policymakers here in this side of the world is a key question, right? We are going to hear from BOJ Governor Ueda later this morning, potentially with more hints about what he might do next month. The key question is, will he be able to hike rates? We are seeing the Nikkei losing ground about 1% as the 10-year yield is holding steady at that 1% level. Of course, we are following Treasury moves very closely as well as yields continue to gain ground. But take a look right now at how South Korea is coming online. Goldman Sachs just downgraded South Korea stocks in the past few minutes. But the Kospi right now gaining 0.9%, a little bit of a divergence when it comes to the Kosdaq and the Kospi, the tech-heavy Kosdaq right now under pressure, while the Korean won is strengthening a little bit towards that 1,300 level. But this, of course, after seeing significant weakness already, Haidi, we have seen the Korean won continue to weaken given the strength of the greenback.
Yeah, and we have kind of seen that implications when it comes to some of these other Asian currencies as well, like watching the Aussie dollar, which on Friday managed to kind of stem a 5-day rout in the Aussie. And we're also seeing some gains when it comes to Aussie bonds as well. Take a look at trading in the ASX. We're an hour into the start of trading, off by about 0.3%. Some of those Uranian names have been gaining. We're also watching Resolute Mining as well, with the confirmation of now that sort of payment agreement with the Malian government. The Aussie dollar is pretty steady at this point, point. And as Shery mentioned, we are watching Treasuries really seeing the dwindling of those 2024 gains now, and the question as to what the Fed does next. And for that, let's bring Garfield Reynolds, who leads our MLive Asia coverage for us. And Garf, it's almost a coin toss for December, right? And you don't envy Jay Powell despite the projected confidence, because what happens with the fiscal side in 2025 is so opaque.
Yeah, that's very opaque, although Powell, was pretty clear. He got a chance almost immediately after the election. It wasn't done, but it was obvious what was going to be the result. To make it clear that, they're a taker, not a giver when it comes to fiscal policy. They'll wait and see how things play out on that front. But on the actual current setup with monetary policy and the economy, in a lot of ways, Jay Powell is pretty much where he wanted to be. The soft landing at worst seems to be the scenario, maybe a no landing. So they're sticking with this attitude that they are in an easing cycle, but they can take their time. They don't need to rush things because the economy is doing well. In fact, surprisingly well. And I think the main difficulty is that markets have continued to run well ahead of the Fed in especially bond markets, in expectations that, well, now the Fed started cutting rates, it'll just keep cutting, and the only question is whether it's 25 basis points per meeting or 50. Now we've got serious doubts that they'll cut in December. If they do cut in December, you're also going to have doubts then whether or not they cut at the beginning of next year. So a much shallower profile for the Fed's easing cycle right now. That's causing a lot of damage to bonds, and it's also helped to bring stocks back down after a pretty extraordinary rally in the immediate wake of the election.
Is that losing hope if you're a yen bull then?
Yen bulls face a very tough situation unless surely, unless Ueda suddenly discovers a hawkishness that he's mostly very strongly avoided. Particularly, the only time that the BOJ really did turn at all hawkish was after the yen had become so weak that the government felt it needed to intervene to support it by buying the yen, using up some of its reserves to buy the yen. So unless Ueda does discover a hawkish tone that up till now he's mostly seemed incapable of using, the yen, along with a lot of other currencies, looks likely to continue to decline into the end of the year against the US dollar.
I mean, it's really unpredictable to try to forecast what President Trump will do once he gets into the White House again. But I've been wondering if the yen could be one of his focus. Because remember when Bloomberg had an interview with him a few months ago, and the first thing he talked about was the weakness of the Japanese yen? I wonder how much impact that could have, what he says around currency weakness in other countries.
Well, the difficulty is that Trump is also very much obsessed with pursuing tariffs. And tariffs are seen as being something that is driving, in fact, dollar strength at the moment. So there is that issue. I'm not sure that Ueda is likely to turn hawkish because of fears about what Donald Trump might do once he gets into the White House. It might at some stage lead to the Japanese government, if it can ever sort out what it actually wants to do, to them again intervening or at least jawboning more strongly. But the yen is likely to continue to weaken from where it is, despite Friday it had a sudden surge, but that looks like a lot of yen bears are going to see that as an opportunity to reload their shorts, and yen bulls aren't going to see that as being a strong momentum play that they need to get involved with.
Garfield Reynolds, who leads our Marcus Live Asia coverage here, ahead of Governor Ueda speaking twice today. Let's get over now to Hong Kong, where Bloomberg's chief North Asia correspondent Stephen Angle is standing by with a special guest. Steve.
That's right. We're here at the Hong Kong Stock Exchange with the CEO of the HKEX, Bonnie Chan. Thanks so much for having us here on a very momentous occasion, the 10th anniversary, well, yesterday was, I believe, yes. Of the Stock Connect program. Shanghai first and then Shenzhen a couple years later. Obviously, a resounding success, according to your assessment, surely, but there's room to grow. How would you say from that tea house meeting between Charles Lee of the HKEX and also, I believe, the Shanghai Bourse chairman back in 2012, that it would grow to this size?
Yeah, thank you, Steve. And it's certainly a very momentous moment. 10 years of the Connect story. I think we're still actually at the beginning. If you look at the volume so far, from the very beginning, southbound traffic has actually grown 50 times, and northbound traffic has also grown 25 times. And this is quite amazing. And if you ask me how we're going to continue to expand it, I'll say 3 ways that we're going to do it. First of all, products. We need to put more products onto the shelf. As you know, we started with stock and then we expanded it to include bonds, ETFs. We're going to soon have REITs. But
we're waiting for that, though. Can I jump in and say there's no date yet?
Well, we're working on the details. I mean, certainly with every enhancement, we need to make sure that, you know, all the screws are tightened up. And there is still a lot of white space that we can fill in. So that's the first dimension. Secondly, the microinfrastructure, which is very important. We need to make sure that the users of the Connect franchise have a good experience. And I think, you know, very recently we've proven that with micro-infrastructure changes, the market can be greatly enhanced. Severe weather trading, as an example. I think we've proven to the world that, you know, Hong Kong as a market has stepped up to that moment. And then third, but not, you know, the last, it's the fact that at the moment, you know, the participants, I think it's still a relatively small pool. I've been traveling a lot recently, and I would say that, you know, the Connect story is still pretty novel to a lot of our friends in the world. And so I'm going to go out there and continue to market the Connect story.
You've traveled a lot. You've been obviously to Riyadh. You've been back and forth to Shanghai and Beijing. You just came back from Lima,
yes,
APEC.
That's right.
What was the key takeaway there? Before we get into these steps, we need to talk about primary Connect and the other things that have been promised but have not delivered. But what was your key takeaway quickly on APEC?
Okay, so my first takeaway from APEC is that I'm very happy to see that countries are still very willing and keen to make friends with one another. So, you know, while I hear a lot about, you know, geopolitics and all that and how it's going to dampen our markets, what I saw in Lima is quite the contrary. So that is a big encouragement. And secondly, the reason why I'm traveling so much is really to get, you know, the story of Hong Kong and Connect out to the rest of the world. You know, in this region, I think a lot of people understand, you know, the impact of Connect and what it brings in terms of enhancing the two-way capital flows between China and the rest of the world. But a lot of, you know, the rest of the world, it's still, you know, learning about it. And so it's important for that kind of engagement.
Would you say the Connect program still, though, has its training wheels on? I mean, there's a bit of shackles. There's been promises to grow it. Primary Connect is the big one. Obviously, Charles Lee, back in 2017, said this is the next big thing.
Right.
This market's been waiting for that. Chinese investors have been waiting for this to get these primary listings into the Stock Connect. Some would say that it held back Aramco from even thinking about Hong Kong. So.
Well, it's very interesting you talk about, you know, how everyone is waiting for it. I think that basically shows that, you know, the Connect franchise has a lot of promise. And in fact, I think the eagerness really stems from the fact that a lot of investors around the world want to take advantage of the growth of the China market, both in terms of, you know, what corporates it's turning out, right? Those are great investment opportunities, as well as the investor base that China as a country is capable of providing the world. So my duty, my responsibility running the exchange is really to continue to build it with those 3 dimensions I just mentioned.
Sure. So northbound has been pretty fruitful for international exposure into China. I think over the past decade, foreign holdings of Chinese stocks have jumped more than 20-fold. But this primary Connect would allow mainland investors to come in and participate in what used to be one of the hottest IPO markets in the world, right? So what's holding it back?
Oh, well, okay, so You're absolutely correct that there is a lot of interest. In fact, if you think about the recent rally we had at the end of September and early October, we saw a very big jump in terms of southbound flow. And I think that illustrates the fact that, there's a lot of accumulation of wealth in the mainland, a very fast-growing middle class, and they're looking for diversification, right? And therefore, I think what we have to do at HKEX is really to continue to build. Primary Connect, I know, is something that a lot of people talk about, but that's not the only thing. We have a long list of to-do for how we're going to continue to develop the Connect franchise.
Okay. What's holding it back, though? I know you can't really. I'm getting a sense you can't really tell me.
Okay,
where are we in the dialogue with Beijing? Because I know they're worried during a slowing economy. They're worried about outflows, obviously.
Okay. So I think everything has its moment, and to make sure that it's successful, you want to capture the best moments, right? So IPO, you're very focused on it. I can see. The world has gone through a couple of years with relatively muted IPO activities. We are very happy that we're seeing a strong pickup in the Hong Kong market. Yep. And therefore, I think we just need to continue to build on that and make sure that, in fact, the strength of the IPO market returns. And I think with a stronger base and, a more robust pipeline, the conditions will be riper.
Okay, so right now the conditions are not necessarily ripe. You've raised about $9 billion this year, I believe. Yeah. $5.33 billion last year. So it's better than last year, but it's way off of 2020. Was it 2020? There was $53 billion or something like that.
Yeah.
So you have a ways to go. So again, I'm going to come back to the Primary Connect. Is it on the docket for next year?
Okay, so let's talk about where we are in terms of the IPO activities. And I'm very happy to report it because last time we spoke, I think, in terms of our league table ranking, we are a little bit sort of at the bottom of the top 10, shall we say. We're now number 4. And we have completed a very big IPO, my dear, which is a $4.6 billion US IPO, the second largest in the world this year, and the largest in Hong Kong since February 2021.
SF Holdings possibly too?
I think they are about to launch.
They just announced that they've had board approval.
That's certainly going, hopefully, to bring our total fundraise this year to above $10 billion US, which I understand, right? Compared to previous years, it's a little bit sort of slower. However, I think you need to look at the relative ranking. And for the rest of the world, the last 2 years have not been a particularly conducive year for IPO activities. But, I think we have reached a pivot point, and I'm certainly seeing momentum pick up.
So if there's not a deliverable on these other initiatives, including what REITs was announced earlier this year in April, we don't have a date for the beginning of that inclusion into the Connect as well.
So a lot of enhancements have been announced, as you know. So besides REIT,
tax waiver,
we also have southbound RMB counter, which is in the works. And like I said earlier, with all those, you need to make sure that the plumbing works. And we're working together with our friends on the mainland to make sure that all the system upgrades, all the infrastructure are built in a way which will make sure that the rollout is very, very smooth.
Last November, we also got an announcement that there would be trading in Treasury bond futures. We don't have any start date of that as well. Do you have any update for us?
Well, I don't. Okay, I will give you the same answer, right? We have been working on the technical aspects to make sure that the rollout will be smooth, and I don't worry about sort of not having a date because, as you can see, right? Recently we've seen a lot of measures being announced by Beijing, and all that have a very huge impact in the market, right? You saw the rally in early October, end of September, early October, and therefore I really don't worry about seeing all these positive momentum build up. In fact, we just need to make sure that there is a way to be ready for it, and not just being technical ready. The market also needs to be ready for it.
I have to ask you, what do you think is going to be the Trump effect on the Chinese economy and how that equates to capital raising, potential action against China, and the dampening effect possibly on the market here?
Okay, I know that question will come.
Yeah.
Now, to me, what we saw is that the week leading to the U.S. presidential election, the trading volume actually softened a little bit in our market. But as soon as the election is over, we saw the volume got back up again. So I think, with the presidential elections now behind us, there is now sort of the market knows how to move on, which is a good thing. To me, this is not the first time U.S. has Trump as the president. We've gone through that. What our market has continued to prove is that, whatever the conditions are, we have that resilience to make sure that we can ride the tide. So that's the important thing.
Bonnie Chan, thanks so much for giving us the opportunity. I believe, our fourth interview we've done in the last year and change. We appreciate it. More to come. Thanks so much. Okay, sending it back to you from the Hong Kong Stock Exchange, of course, the 10th anniversary of the Stock Connect program today.
Stephen Engel there with that conversation. And of course, we continue to watch what the Trump administration could end up looking like and what the implications of that will be for Asian economies and markets. But right now, we're hearing from the New York Times that President-elect Donald Trump is expected to invite the contenders for the role of Treasury Secretary to Mar-a-Lago this week. And this could include, as you can see in that footage right there, the head of Apollo Global Management, Marc Rowan, not to mention the former Fed Governor Kevin Warsh as well. We had been expecting for Trump to pick the heads of either Cantor Fitzgerald or Key Square Capital Management, but according to reporting by the New York Times, Trump has been having second thoughts about the top two candidates, so he'll be inviting all of the contenders for the role of Treasury Secretary to Mar-a-Lago this week. And take a look at how markets are trading at the moment. We're watching one stock right now, and that's Samsung, gaining more than 6%. We saw a jump already on Friday, and all of this to do with plans to buy back about 10 trillion won. That's more than $7 billion off its own stock over the next year. It's one of the larger shareholder return programs for Samsung's history, and we had seen it having its best day since March of 2020, just on Friday. Right now, we're seeing that jump of more than 6% in the Korean trading session, but still Samsung is down in the double digits, more than 20% this year. We have more ahead on the Asia Trade. This is Bloomberg.
Chinese President Xi Jinping has told President Biden that he's ready to work with Donald Trump to improve the relationship between the world's biggest economies. But Xi also used the meeting to lay out a warning when it comes to China's red lines. Our executive editor for the Greater China region, John Liu, joins us now. So, John, tell us about these red lines, these boundaries, and are there expectations that President-elect Trump in his second term might sort of attempt to go beyond them?
Well, I think the big thing about a second Trump administration is there's a great deal of uncertainty about what exactly a U.S.-China relationship would look like. So it appears that in this conversation that President Xi had with President Biden, essentially a farewell chat, President Xi tried to lay out some guardrails to that relationship. He made the point that 4 red lines that President Xi laid out in that meeting. One, that the U.S. should not seek to contest the Communist Party's grip on power in China, that the United States should not try to push China to become a democracy, that the United States should not try to contain China's economic rise, and lastly, and probably most importantly, that the United States should not support Taiwanese independence. And so it did seem President Xi, ahead of a new Trump administration, trying to put some guardrails, bumpers around where this relationship could go.
They also discussed some guardrails around artificial intelligence.
Well, there are lots of different areas in which the United States and China actually agree. And so one where we saw an agreement come out of the APEC summit was an agreement that neither country would hand over the ability to use nuclear weapons to AI systems. That has been a big concern, that as AI progresses, as it is integrated to more and more weapon systems, that there could be some unintended consequences set off by the use of AI, and both countries, both presidents now agreeing that they will prevent that.
We had a guest earlier talking about how China might be open for more bilateral relations and a stronger friendship even with Japan given its economic slowdown. What are we seeing in terms of a recovery or turnaround in China? We know that we have the loan prime rates also being announced by commercial lenders later this week.
Well, we've got some data recently that shows that potentially the economy is starting to rebound, to respond to the stimulus that the government has introduced over the last couple of weeks. We've seen some improved numbers for the real estate market, which is probably the most important part of the economy at the moment because of the crisis that we've been going through over the last 2 years. We've seen an uptick in retail sales. And so I think what we're looking for is a continued recovery trend in all the data and potentially corporate earnings that come out over the next few months. And the reach outs to places like Japan, to Korea, to other countries across Asia and in Europe, I think that is just part and parcel of everybody getting ready for a second Trump administration, not knowing what lays ahead. If there are going to be tariffs, China looking for ways to keep its access to as many markets open as possible.
Executive Editor for the Greater China region, John Liu there. More ahead on the Asia trade. This is Bloomberg.
We have an alert on the Bloomberg right now. We are now hearing that President-elect Donald Trump has announced that Commissioner Brendan Carr will be chairman of the Federal Communications Commission. The Commissioner Carr currently serves as a senior Republican on the FCC. And of course, this post is very important because it also has implications for tech giants and their issues around monopoly and issues around tech companies' dominance in the U.S. So we are now hearing President-elect Trump announcing that he will make Commissioner Brendan Carr chairman of the FCC. Right, we'll have more on the Asia trade. This is Bloomberg.
We do have trade numbers coming out of Singapore, just crossing the Bloomberg now. October electronics exports rising 2.6% year on year. We're seeing broader non-oil domestic exports falling by 4.6% year on year. The estimate was for a slightly less steep decline of 4%. When it comes to that month-on-month basis, it's a fall of 7.4%. The estimate was for a fall of a gain, I should say, of 2.3%. So really missing expectations there. This is, of course, we've seen Singapore as a very externally exposed, trade-reliant and globalization-reliant economy. We had already heard from the Singapore Prime Minister even prior to the Trump election victory that there's some concern about increased trade frictions with his return to the US presidency, really highlighting the significance of trade to Singapore's open economy and the need to reinforce trade links with other countries and the importance of some of these multilateral institutions like the WTO as well. We did really kind of see in this latest set of numbers some of the weakness coming through after what has been some pretty robust numbers for electronics exports in particular. We did see earlier this year, just in September, that component of exports rising at the fastest pace in 14 years. But we have seen that trend of growth in overall non-oil exports trailing forecasts, and that's certainly the case in the latest numbers that we're seeing, Shery.
Yeah, and of course, very important for the trade outlook where currencies stand across Asia. Take a look at how we're trading right now because we're seeing some downside for the U.S. dollar at the moment. So Asian currency is getting a little bit of a boost. The Japanese yen still at around that 154 level. We'll be watching Governor Ueda's comments at an event today. Of course, we have the weakening yen, and this will be his last big chance to sort of communicate his thinking ahead of the rate decision that he has to carry out next month. Take a look at the offshore yuan, holding steady at the moment. moment. We do have the loan prime rates coming up later this week, not to mention, of course, we do have some big earnings results, Xiaomi, Xpeng, Neo, among some of those that are reporting. The Korean won also strengthening a little bit. We have significant strength for Samsung, the biggest stock in the South Korean market, on their plans to buy back shares. But as I said, it's really a big earnings season right now for Chinese companies. And we already had, for example, Alibaba reporting anemic growth for its last quarter. Right, in its core Chinese e-commerce business, dragging down financial results that benefited from progress in its international and cloud divisions. The company said the domestic e-commerce operation only eked out a 1% gain in the September quarter. On the other hand, its international division saw a 35% growth in revenue, while its cloud unit also grew over 7%. Alibaba affiliate Ant Group has reported a nearly 200% profit gain in the June quarter. It marks a reversal of a year-long decline as the fintech company regained its footing from a government crackdown. Ant says it contributed $343 million of profit to Alibaba, which translates to about $1 billion in profit based on Alibaba's 1/3 stake in the company. And as I mentioned, Chinese EVs in focus. Xiaomi, Xpeng, and Neo reporting earnings. And attention will be focused on what Donald Trump's return to the White House could mean for Chinese tech and EV firms. Our earnings specialist, Rena Sasaki, joins us for more on this. What should we expect, Rena?
Yes. So Chinese EV makers, Xiaomi, Xpeng, and then Neo are reporting on the heels of European Union's imposing tariffs on Chinese automakers in late October, as well as the president-elected Trump will be expected to be in office. And talks between China and then Europe on the alternatives to tariff having seen limited progress, according to people familiar with the negotiation, but still Xiaomi continues to grow as EV deliveries rise, and new models from Xpeng and Neo may lift future earnings. And Xiaomi's third quarter revenue probably rose 28% as its EU EVs delivery continued to accelerate. And Xpeng's operating loss likely widened this quarter, and margins remained weak, even as the deliveries are set to surpass company's guidance.
When it comes to some of the other bigger tech names as we round up the week, what are you looking out for? Because obviously that theme of domestic weakness and competition is still pretty strong.
Yes, Baidu, Weibo, and Kuaishou continue to face earnings risk amid intense competition and weak economic sentiment in China. And Weibo's third quarter earnings were dragged by lower advertising revenue, and a pickup in fourth quarter and then growth is likely to be short-lived. As for Baidu, with advertisement revenue also on the downtrend amid Chinese consumer sector pains, adjusted net income for this quarter is projected to decline 14%.
Our earnings specialist, Rena Sasaki, there. Well, joining us now is Gokul Hariharan, who's the MD, co-head of APAC Tech and Media and Telecom Research at JPMorgan. He believes that a Trump presidency could have a medium-term positive impact across Asian tech. Gokul, really great to have you with us. So talk us through your reasoning, because there's a lot of concerns about, a China-US tech bifurcation and perhaps limitations and constraints that could come through from a broader trade war. In what aspects do you think that we could actually see an uplift?
Yeah, good morning. Thanks for having me. So overall, the market is still quite skeptical about tariffs and trade wars. But I think a couple of things are very important to keep in mind. One, U.S. enterprise spending has been very depressed in the last 2 years. Enterprise tech spending is still one of the key areas of demand growth. If we go back to Trump 1.0, if you start to get some tax cuts, if you start to get some deregulation, that's likely to be a big boost for enterprise tech spending. And a lot of North Asian tech, be it Korea, Japan, Taiwan tech, even Indian IT services, all are exposed to enterprise tech spending in a large magnitude. So that's one area where we are quite positive that we could see a 12 to 18 month positive impact if enterprise spending bounces back. Second is obviously currencies. US dollar obviously has strengthened. Local currencies for the big exporters, tech exporters in Asia, I think they're all beneficiaries of US dollar strengthening. So that's also going to drive some degree of earnings upside. Now, tariff is definitely a risk. We are not completely ruling that out. But if you look at this time round, most of the supply chain companies are a lot better prepared to mitigate some of these tariff risks. Some of the new supply chains have already moved out of China into other locations like Southeast Asia, India, Mexico, etc. So we start to see that companies are a lot better prepared than, let's say, 5 or 6 years back when we had the tariff wars 1.0.
What's the most realistic, modelling that you can do around Trump tariffs on China and Asia tech exports?
Yeah, we don't have like a base case given we don't know how the chips are going to fall. But if we go back to Trump 1.0, a lot of the tech products were actually largely exempted from tariffs. Our view is that where there is potentially going to be a lose-lose kind of scenario, including some of the bigger products like Apple, etc., most likely tariffs are not going to be that big. Like I mentioned, I think we can't really predict what the tariffs are going to be, but the preparedness of the supply chain is probably much better today compared to 5-6 years back, which is why we feel on a medium-term basis it's probably not going to have as big an impact as the market is worried about right now.
When it comes to investments by Asian companies in the U.S., we saw a lot of them really seeing that benefit of the CHIPS Act, the Inflation Reduction Act as well. What can we expect in terms of President-elect Donald Trump and his changes in U.S. policy, and how that could lead to changes in thinking by all of these Asian business CEOs when they look at the U.S. and their investments long term?
I think overall, if I look at the semiconductor space, North Asia is still pretty much the fulcrum of the global semiconductor industry. That is not going to change in the next 5 to 10 years. The CHIPS Act definitely has helped to drive some degree of investments, not just by Asian companies, even American companies such as Micron have invested in the U.S. Because of the CHIPS Act. So setting up a local ecosystem in the U.S. does require a lot of that funding effort, a lot of supports, tax credits, etc. I think the Asian companies are still likely to keep investing in the next maybe 2 to 3 years. Obviously, they're going to be looking at how the policies evolve. But for now, it feels like there aren't going to be big changes in terms of the CHIPS Act provisions. Eventually, I think we are still going to have a supply chain where 70-80% of semiconductor production is still going to be mostly in North Asia. I don't think that dynamic is going to change dramatically in the next 5 to 7 years.
Despite, as you said, this sort of redirecting of supply chains that we've seen from Trump 1.0?
Yeah, I think even with that, I think a lot of the leading edge technology and leading edge semiconductor production, I think it's still very much like a single source kind of supply chain, be it in Korea, be it in Japan, be it in Taiwan. It's very hard to create a lot of redundancy in the system because it's quite expensive. Companies are not willing to kind of invest that kind of capital upfront. So we will see a little bit of redundancy and a little bit of geographic dispersion happening. But I don't think it's going to be like a major kind of shift. If you look at the leading companies and their plans to invest in various locations outside of North Asia, it's probably still going to be 20% of the capacity in the next 5 years rather than much more than that.
Gokul, we've already seen various stimulus measures coming from Beijing as we head towards more potential pressure coming from Trump 2.0 and its new policies around tariffs. What more can Beijing do at this point in order to help its companies?
Yeah, I think for China tech, we are actually very positive from an investment perspective on the localization effort. We do see that localization effort picking up even more momentum, especially in semiconductor equipment, semiconductor materials. We are also seeing some of that happen in software. We are seeing a little bit of that happen in other areas like EV as well. So overall, it definitely feels like the localization is definitely an investment theme in China that we think has another 4-5 years of legs at least. The level of localization in a lot of these supply chains is still quite small. So there is still a lot more room to go in semiconductors, especially there is quite a bit of room to go. Now, there are obviously technology restrictions that limit Chinese companies to invest in a lot of advanced technology. But at the same time, the semiconductor industry is a long-tail industry. There is a lot of opportunities for growth in the long tail as well. And that's where a lot of the Chinese companies are investing their capex, their capacity, and starting to gain market share.
Gokul Hariharan, good to have you with us, Managing Director, Co-Head of APAC Tech Media and Telecom Research at JPMorgan. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how we're tracking across major Asian markets. We're almost 2 hours into the start of trading in Australia and about 45 minutes when it comes to major markets in Japan and Korea. We're seeing quite a bifurcated session at the moment, mostly though a little bit of weakness coming through from the Nikkei 225. There's a bit of event risk as we're expecting to hear from BOJ Governor Ueda not once but twice today. So it's that sort of last ditch hope for yen bulls, but they would have to hear something quite hawkish from the BOJ Governor to be able to change that narrative, particularly at a point where we're seeing these market expectations for the Fed really start to fade as well. The December rate decision is really more or less a coin toss at the moment. We're seeing the Kospi putting on over 2% though, and we're also seeing the S&P, the ASX 200 here in Sydney just flipping just in positive territory, but still kind of sideways trading other than some strength when it comes to the likes of uranium shares in particular. We also did have a flurry of changes when it comes to the outlook when it comes to Goldman Sachs as well, and meaningfully and quite interestingly an upgrade when it comes to Philippine stocks, despite of course that market entering correction territory, upgrading that to overweight perhaps on the basis that there is a little bit more value to be found there. We're also seeing an upgrade there for Singapore to market weight. We had some weakness coming through from those domestic, the trade numbers, the export numbers in particular. So quite interesting given how externally exposed that particular market really is. We're also seeing that downgrade to Korea to market weight. We have seen a flurry of some of the weakness there, but really this is sort of reflections post the US election and how some of the macro environmental factors have become more challenging according to Goldman Sachs Asia Pacific. Well, Boston Fed President Susan Collins says a rate cut could still happen next month, but emphasised that the final decision will be guided by incoming data. She told Bloomberg exclusively that she's not seeing evidence of new price pressures.
There's no preset path. I do see rates as still in the restrictive range, which means that over time some amount of easing will be appropriate. But the economy's in a very good place right now. And inflation's coming back down to target. The labor markets are healthy. We're seeing solid growth. The goal of policy is really to sustain that healthy set of conditions, recognizing, there are risks on both sides. And so I think we're well positioned. I certainly wouldn't take another ease in December off the table. But again, we're not on a preset path. And so we'll have to look carefully at the data and see what makes sense when we get to December 18.
Well, the data this week showed inflation a little bit stronger than it had been in the CPI and the PPI, and those who do the nerdy calculations for the PCE say we're going to see the same thing. Should you keep your foot on the brake a little more then, because inflation is not back down to your target?
So, I don't focus too much on any one data point. I think it's really important to look holistically. And when I do that, what I see is that, first of all, inflation has come down significantly. I focus on the, a couple of month averages, and if you take food, energy, and in particular shelter out, the rest of inflation has actually been in the range consistent with the 2%, exactly what we'd like to see. What's really still elevated is shelter, and that is taking time to come back down, and a lot of that really reflects shocks from the past. I'm not seeing evidence of new price pressures, and so I think it's important to stay the course, but that analysis of the data is part of why I thought it was really appropriate for us to begin easing in September, and to be in an environment where we are really looking over time, methodically, perhaps patiently, to be normalizing policy, to maintain those healthy conditions that I talked about a moment ago.
Boston Fed President Susan Collins speaking exclusively with Bloomberg's Michael McKee. You can watch us live and watch any of our past interviews. TV Go is, of course, your function. You can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. China is facing an uphill battle to restore its population growth. A study by Bloomberg Intelligence sees the nation caught in a demographic trap set decades ago with an entrenched baby bust, leaving its population decline beyond any easy fixes. Senior analyst Ada Lee joins us now for more on this report. And Ada, we have seen Chinese authorities really trying to encourage its population to have more babies. So what's the problem right now?
So for the past few years and also recently, the central government and local governments have been publishing various supportive measures, policies to try to get more people to have more babies. But so far we have seen limited impact, and as you can see, in the fertility and birth rate, it has continued to decline. So our outlook is that for this year, 2024, we may see a short burst of birth rate, and that is due to the Year of the Dragon, as the Chinese people think it's prosperous to have children this year. But going forward to 2035, we are actually expecting the birth rate to continue to decline, and that's because people just opting out of both marriages as well as having children.
And the government has also been trying to make it easier for people to get married, also harder to divorce. And I guess my question is, government intervention was kind of what was behind this demographic shift and the problems in the first place, right, with the one-child policy. So why would more government intervention and policies work?
Well, that's a very good point. And as you state, one-child policy, then they moved to two-child policy. Now we have three-child policy, and people are just not giving birth and not even getting married. So we are actually expecting that the marriage rate could hit record low this year in 2024. And that's also, with the shifting of traditional values, people think getting married is too expensive. Also, this year being the Year of the Widow, which is seen as an unfortunate year to get married. I think all these combined together with the muted consumer sentiment is likely to drag the marriage rate this year. And in the longer term, in 2035, we're expecting this kind of decline to maintain its momentum. And that's just because even though the government is trying to make it easier to get married and more difficult to get divorced, people are just not budging. So imagine this. If it's more difficult divorce, then people are opting to actually not get married so that they don't need to get divorced to start off with.
Oh, my goodness. So it's a graying population, it's a shrinking population inevitable. Then what more can be done?
absolutely. We are actually expecting the dependency ratio to skew, and then there are going to be a lot more elderly people going forward with a shrinking working size population. The government, like we have discussed earlier, there are a lot of interventions that they're trying to do and trying to impose on both a central government and local government level, and they're really, really trying to encourage people to do this. Are they going to go as extreme as Moscow, what they recently announced in terms of legislating against propaganda of not having children? I think that may be a little bit too radical for China at this stage. I think based on what they have done historically, China is likely to maintain more gradual momentum in relaxing the children policy.
Our Bloomberg Intelligence senior analyst, Ada Lee there. That is it for the Asia trade. Our markets coverage continues with the start of trading ahead in Hong Kong, Shanghai and Shenzhen. The China show is next. This is Bloomberg.